Hi, everybody. Tim Knight, Slope of Hope here. Our first audio screen recording of 2010. Sorry, I'm just puzzling over what my dog's crunching on. It's harmless. Anyway, yes, here we are. So why did I call today's post bullish bravado? It's just simple arithmetic because this may shock you, this may surprise you, but I really would love to be and act like a true bull one of these days. I'm not talking about right now, though, and let me explain. This is a matter of simple arithmetic. And I'll start off with this chart as an example, BEXP, Brigham Exploration. Now, looking at this particular chart, and I've purposely cut it off like last March, we had a chart here that had plunged from like $18 to about $1. And subsequent to that, it has gone up, I guess, about 1,400% to just about its former highs. And 1,400% is 1,400%. That is an amazing return. And being a bear or trading in a bear market, the best you can hope for is the high double digits, and that is extraordinary if you're able to get that kind of return as a bear. More typically, you'll be looking for 15, 20, 25% gains, as it were, because of the diminishments in the stock's value. So, being a bear, trading in a bear market, unless you're a really deft options player, you are simply going to be hamstrung by simple arithmetic. You are never going to see multi-hundred and certainly not multi-thousand% gains. Now, why am I saying all that? Well, anybody who's been to my blog even a little bit knows that my view is not that we're in a wonderful period of bullish opportunities. Clearly last March, because the market was completely battered to pieces, there was this uber dead cat bounce, which made some people a tremendous amount of money. And even though stocks went up a lot, I don't consider that a bull market. It's a true bull market, to my view, is something like what we saw back in, say, the early 1980s. If we go back to like 1982, that kind of thing. I mean, this to me is that's a bull market. I mean, that's where fortunes are truly made. I was sort of surprised last night. I was thumbing through a magazine reading about Warren Buffett's history, and back in, I guess, about 1983 or even 82, whenever the Forbes 400 first came out, his net worth was $60 million, which not only was considered an amazing amount of wealth, but landed him on the Forbes 400. $60 million even today, after the global crisis, wouldn't even get you near the list, wouldn't even get you in the neighborhood of the list. And so trillions of dollars of international wealth are created in this kind of bull market, that is the 40s and 50s, and this kind of bull market, that is the 80s and the 90s. This pop that we've seen is strong, and it's made, as I said, some people a lot of money, but I consider it a counter-trend bounce, not a good real bull market. Now, if what I'm looking at comes even close to coming true, a few years from now, let's call it 2014 or so, we'll be in the kind of area where I see real opportunities for making money on the long side. And I wasn't born to live my life as a bear. I would love to partake in that kind of market, but in my view, it's that is not the time to do so. The reason I brought up BEXP is because as a technician, and we're on a monthly basis here, so it's a lot cruder. Let me drive us back to I'll do like a 2-year or a 10-year daily. As a technician, looking at a chart like this, I guess you could say, gosh, doesn't it look cheap? But the way I trade, the way I chart, nothing could have really prepared one for that kind of radical bounce. And so it's frustrating, but I can't just wildly guess that just because the stock is a dollar, it's going to have some kind of amazing growth. I mean, you could have anticipated the same thing with Citigroup. You could have looked at a stock like this, having gone from 50 to say 250, and thought, "Wow, Citi, that's a worldwide franchise. Let's get a bunch of it." And it's still, it's gone up to be sure, but it's still kind of gone not a lot of places over a long period of time. I mean, it's not that much higher than it was back during the crisis at $3.53. So just wild guesses, it just isn't my style. It's just not put together that way. Anyway, let's look at a few charts in the 4 minutes I've got remaining. It's the same old story. The charts to me look like what you're seeing in front of you. A huge bounce that is pushing the greatest limits in my own charts as to how high this thing can go. In my view, for me, it's too late to run around buying up stuff, hoping to catch the this comet. It's just the risk reward is all out of whack. Could something like this continue to creep along this trend line and even make it all the way to the bottom of this? Sure, it could. As I've mentioned, there are some charts that suggest early March as a top, just as last early March was a bottom. And so I'm still very much in the 40% of cash committed, not even talking about margin. I mean, we're just talking about cash commitments. I haven't touched margin in a long time. So I'm still pretty cautious based on the idea that this could just kind of keep inching along that sort of line. Let me just see if there's any particularly interesting charts here. Gold, I'm just kind of avoiding altogether in either direction. I think that today, like looking at GLD, the fact that it kind of went nowhere is interesting. You've got these two spinning tops right here. Yes, it had retraced to near that trend line, but this is fishy, fishy looking activity to me. I'm viewing this with interest, but it's a little peculiar, and we did dip down a little bit today. The Dow has really not cared too much about that 50% line. We are surely above it at this point, kind of mashing up against that Fibonacci arc right there. But should the bulls continue to run with the baton, there's a good 750 points here before the next meaningful technical resistance. So we're still got some of the beginning of the year weirdness going on, but we'll see really what becomes of that. NDX, no big surprise here considering what we just saw with CompQ. One thing that Gary Savage, as I've mentioned, has proposed is we might be entering a 2004 kind of market, which I'm pointing at right here. That is, we had this staggering leap higher as we have here, and '04 was kind of a somewhat sawtooth down for a while, and over a multi-year period it continued going up, but there was a kind of some backfilling going on before we pushed higher. That, I suppose, is another possible analog as opposed to the oft-mentioned 37 to 42 analog. And finally, in the little bit of time I got left here, the Russell 2000, always a favorite of mine that I'm watching very closely, is approaching this very important upper trend line as well as the base of this huge topping pattern. This is where it's all at. I mean, this is a tremendously important chart. So anyway, that's about it from me for today. It was real quiet last month, so I'm glad most of you are all back. And I'll see you here as we work our way toward the very important Friday jobs number. Good night.